Today on the CEO Barbecue, we're looking at a copper development asset in the Chibougamau district of Quebec. That's just gotten an updated PEA together with XXIX Metal Corp. For a bullet point summary of this and all other CEO interviews, go to researchtalks.com and subscribe to our free weekly newsletter. Now, this company that you're about to hear from has paid us for the production of this interview. This interview is intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm and should be the expectation. All conversations are, of course, general and impersonal in nature, and they contain forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital is at risk. And please visit setterplus.ca where you'll find the company's official filings. Please understand that there is an additional level of bias with this company specifically because the company's chairman, Stephen Stewart, is a personal friend of mine, as well as an investor in my company. And I am sometimes an investor in some of his companies. And although I don't yet own shares of this specific company, I might own them in the future without a prior warning. If you're not 100% sure that you understand all the disclaimers that I just showed you and told you about, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, XXIX owns the Opemiska project again in Quebec, where they recently published an updated PEA with a $505 million base case NPV 8 and a $617 million initial CAPEX, which could be paid back in 2.3 years, resulting in an after-tax IRR of just over 27%. Of course, these economics are preliminary and nothing is without risks and challenges. So we'll talk about hopefully all of those later on in the conversation. XXIX needs no introduction as I've interviewed them multiple times in the past. So if you're new to the story and you want the original CEO Barbecue, I'll link those in the description of this video. Please go and watch them. But the company's ticker symbol is the same as its name, essentially. So it's XXIX on the TSXV, where it trades for 13 cents per share, which multiplied by its 307 million shares outstanding makes this an almost $40 million company. Time for me to shut up already, though, and get into the actual barbecue here. But first of all, Guy, merci d'être ici.
Bonsoir. Comment ça va?
Bonsoir. Oui, I practiced this for like a half an hour in the mirror before we kicked off the interview, so I thought I'd try to be funny here. But no, the pleasure is mine. It hasn't been too long since we last spoke, but you've got a new PEA to show for. The market doesn't seem to care too much about it, though. Why not? What's the catch?
Well, I think we have to get the story known, and the next 2 months, it's going to be marketing for me. We spend a lot of time initially, and even before my time on the resource. And when they hired me, it was all about doing a PEA, and this is we delivered on it as we told you in the summer. Now it's about getting the story known. Where we are comparing ourselves with, I would say the peer group. I don't know. Probably it's the first time you hear this from a CEO, but I think my stock is undervalued, and we'll do everything we can to bring the stock up and get the story known. Because I think when people understand the story and understand the risk and reward, I think the stock will re-rate.
So essentially, because that would have been my follow-up question, how do you fix it? People want to make money off this thing, essentially. So how do you make the money? You think marketing is going to be part of it, or do you think there's going to be any more de-risking, I suppose, or something else that you can do on the asset level?
Okay, we have to travel both roads. Right now there'll be a big marketing push. You'll see things that you never seen XXIX or the org group do in the recent past. I've got conference lineup. I'm going to Europe later. At the end of the month of November. I'm having a lot of meetings scheduled in the next few weeks. And, our goal is to get the story known and then bring people to the sites and bring people to, get meetings with us. We'll explain to you what this project is all about. And it's a very simple project. And we have had a very good, we'll talk about this, I'm sure, reception in Chapais. And, the de-risking will go through, maintaining the social license and, sharpening up the pencil on the cost and on the studies to go to the PFS and DFS. I mean, that's my goal. I mean, that's the technical part of it. And then, marketing is the other part.
I do want to talk about Chapais and what happened there at the consultation. So we'll do that toward the latter part of the conversation. But it's a bit of a vanilla question here, though, Guy. What is it? Is the PA what you expected it when you first joined the company, or do you think it could have been better? Essentially, yeah. How are you personally kind of looking at this?
I'm very happy with the PA. I mean, let's be honest, we have tailwinds, so that helps. But in terms of where the things, I mean, if you look at our operating cost, it's more or less the cost that we had lined up when we did the MRE. So there's not that much difference. The CAPEX is about where I had figured it out in the scoping that we've been doing, almost a year ago. So I have no surprise. I mean, it was all about change the metal price, you change the IRR, but in terms of the structure of what we're doing, I mean, we were playing with various scenario last year, and 12,500 was the kind of milling rate where we were focusing on. And at the end of the day, it didn't change. The total capex, I remember I was using 450 US million. We're at 610 Canadian. It's honestly the figure that I had, when I was doing those kind of things last year, we fell very close to where we were. Now, we had discussion about metal price at the end of every month, the past 3 months, as we were progressing the study, saying, what will we, what do we use to be, fair with the market, but not be too crazy. And I think, we'll probably pick a right number, but, we can play with it. At the end of the day, when we go into production, it'll be a totally different number anyway.
Mhm.
What was important for this PE is that now I have a technical report. I can talk about it. Can talk about it to people in Chapais. I can talk about it to the various government entities. I can go to Quebec Hydro and get myself in line for power. It's a step that was required, and I think it's still robust. And when people start putting the magnifying glasses on some of our number, I think they might argue that some are lights, but I know that some other place things are probably padded. So I'm fine.
Yeah. Well, you're mentioning the capex here. Your capex is higher than the base case NPV. That's a ratio I like making. So, NPV to capex below one for you, though. Is that a concern?
No, I'll tell you why. One of the reason is that we have a 17-year mine life. Okay. And if this project had been in the middle of the bush, far away from Chapais, it could have been a 11, 12-year mine life, okay, at 20,000 tons per day. In Chapais, it was a requirement from the leadership of Chapais. They wanted us to make a generational project. So there was a bit of arbitrage here. But I think that when you look at the payback, my payback is very short. So it kind of, I would say, counterbalance a bit of, my NPV things. The present value, 8% of everything after year 7 is worth 50 cents in the dollar and decreasing. And on the other hand, I'm going to live through at least 2 cycles of metal price. So, I mean, you cannot get the cake and eat it.
Have you tried? I mean, it is Halloween. Well, there's loads of things to touch upon there, NPV and capex, and the life of mine is interesting to me as well as to why you picked that number, how do you came to that. But part of the capex can be carried by a government grant here, is what you note in a PA, which seems a bit complicated? I get talk to me more about that grant here. I get the language around it in the news release didn't seem certain to me. So what is it? What do you have to do to receive it? What are the conditions?
Well, it is a fairly new program by the federal government, and even I mean, I'll be honest with you, when I saw the magnitude of the number coming back, I was even surprised, and I asked my QP to double check and educate me on this. Uh, we don't see it very often in Quebec because the gold mines don't get it. It's for people that are on the strategic mineral list, and it has to do with reimbursing part of your CAPEX for the mill construction.
Mm-hmm.
And in our case, we added a portion of contingency and indirect related to the mill also. But it is a fairly new program that has been put together I think it's been talked last year, and it is going on now in 2025. I'm not aware of any company that have received check. I've seen I showed you a number of companies that have this refund in their technical reports. Some have buried it, and some like me were putting up in front and saying, in fact, it doesn't cost $630 million. It's going to be closer to 450 or 470. I don't remember exactly, but the point is, it is there. We're showing it. It is like everything else, like your tax rate. If the government cut off the program, there's an election, and somebody else showed up. I mean, they can change it. I mean, there'll be disclosure around that when the 42-101 comes out. But right now, it is there, and we're showing it.
How did you calculate the amount of it, or who calculated it?
It's the guys from Evomin who are the QPs on the mining cost and the financial model of the PEA. And they went on site, and they go on site, and they say everything related to the mill. And if I was using electrical trucks, they would be, that CAPEX would also be classified for the refund. Unfortunately, right now in the PEA, there's no electric trucks in the 140-ton range, so we're using diesel. But hopefully, as the project advances, some manufacturer will make trucks in that category electric. But it's mainly the hard asset related to extracting minerals, strategic minerals.
Well, essentially, what I'm trying to figure out here is are they going to get it or not? Because it does change the story, in my opinion. And I suppose this is mining, so you try to work in probabilities, not in definitives. So what do you think? I mean, based on what you know so far, how probable is that some of this will offset your CAPEX?
I would think that I have to say that I believe in it. I mean, it's there. It's the law. It's a Canadian federal program, and I don't think that they will back up. When you see what the U.S. is doing with their critical mineral, where they make a direct investment in the company or the project, it seems that Canada went the way of refunding the project when it's built.
Yeah.
I would be surprised if they actually back up from this, because as time passes, more and more company would show up and say, "Hey, my project is coming, do it."
Yeah. Yeah. And I guess I'll follow along with you, and then we'll talk about that as it goes, so that you can tell me what kind of requirements you have. Is that when would you go and apply for it, though? What's kind of the timeline for having a higher degree of certainty here?
Well, okay, it's based on the timing of the asset being put in service, and it's once the money is spent, it's coming back within 18 months of having spent the money. So the sooner I get I spend it, the better I get it. But it's copper is a strategic mineral, so it's copper, nickel, lithium, graphite. That's the company that I've seen on the various 42101 that we looked at, and those guys already there's a few guys ahead of me, so we'll see if they get their money. Nouveau Monde,
Hmm.
graphite. Uh, the other one, I forgot. You can list it. We can talk offline,
Fine.
but
But yeah, I mean, really, what I'm thinking about here. So you don't get the money up front. You don't apply
no,
for it and get it. So you got to
no.
make the expense and then essentially try to
Yeah,
to make it back. Okay.
yeah. But if the program is there and I'm about to break ground to build this mine within 2 years, we'll put together a financing package, and it's easy to get a loan against a government refund coming up in 2 years and a half or 3 years in your package.
Mhm.
I mean, you can go a bit higher on the leverage, knowing that there's another than $40 million that would come back in 18 months after you put your asset in service.
Well, but you don't know, right? That's kind of the point. Like you would
Well,
expect it to, and so that's really what I'm thinking about here. Is like, what if you don't receive the CTM ITC? Like, what does it? Is it still financeable?
I, I think so. I think it's a bite that is chewable. I mean, for a project that has, don't forget that everything we're talking about right now is done on a you know what is it, 435 copper and 4,300 gold.
Mhm.
We're about what, 490 copper and 4,000 gold.
Okay.
Who knows where we are in 4 years, but I mean, if we're anywhere close to those prices, the payback is less than 2 years. And my NPV at that time is almost $900 million.
Mhm.
Uh, I'm not too concerned. My cash cost for the first 6 years is $1 a pound copper net of byproduct.
Yeah.
I can weather a lot of bad weather with that.
Gold's got a three handle on it now, so it's just under 4,000. But copper's above $5. Copper's almost five
Yeah.
ten now.
And that's two-thirds of my revenue. It's at those kind of prices, we're running between 66-33 and 70-30 type of thing in terms of spread of revenue.
Do you feel like these prices that you ran the PA at are conservative enough, though?
Yes.
It it also looks
I mean,
like
I think, I mean, what, what, what can happen? I mean, what can happen to bring copper price below $4? A huge recession where demand dies, something like 2008. But 2008, we were, what, 250 or something. And, within a quarter, we went below $2. And, a quarter later, we were back to $2. I mean, it was sharp and financial crisis. It may happen, but the long term, it's very difficult to get copper mines out right now. And, the guys in lines are, looking at, billions of dollars of CAPEX in Chile just to stay at the same production level because of the grade going down. So, I've got a 1% copper equivalent mine for 6 years. If I cannot get this finance, I mean, who can?
hmm, that is an interesting point. I suppose it goes back to the life of mine as well, the life of the asset here, and I think the government grant also only covers long life assets, as far as I understand it. Is that part of the reason why the mine goes on for 13 years, or how did you come up with 13 instead of, I don't know, 6?
Well, I mean, we played with the various scenarios. Like I said, there was a ask from the leadership of Chapais that they were expecting something that would be generational, a project on which you can build future development of the city and use this as an anchor. So they were not too favorable of what I would call hit and run type of thing, where you come in, you stay there 10, 12 years, make a big hole and disappear.
Mhm.
They want people to invest in coming in and living in Chapais, building a house and buying a house and staying there for 25 years. So that was one of the requirement. Uh, the other one basically is financially, the longer the mine life, the lower is your NPV basically. I mean, uh, So we had to make the arbitrage between the two. But the way that the geology presents itself, I have the luxury to be able to load the front end of my project with higher grade. It takes a little bit of stockpiling strategy to generate 6 years of 1% copper equivalent grade. And basically, that permits, to recover all the capital on under most scenario that you can imagine. And after that, it's really a case of having, it's a margin business.
Mm-hmm.
There is also, remember, I'm processing 55% of the resource that we declare in June. We declare 140 million tons of zero point 0.7 copper equivalent, and we're processing 77 million tons of zero point 0.7 equivalent. So there is still material left in the resource base. And even this summer, when we talk about this, I was showing you the difference between the 25 MRE and the 24 MRE. And we lift the floor of the MRE pit using higher cost. And if the margin increase, the pit can go deep. There's plenty of ore available. The saddle zone that we've been talking many times. If it's not me, it's Stephen. The saddle zone has not been resolved. There is a lot of it with the drill hole. My guys cannot. They're trying to fit the structural model into the it, and it doesn't work. And maybe the model is not right for this part. There's also the Cook project that we're drilling as we speak. So there is plenty of things around to make this project even longer in terms of life. But it will be paid off in the first 2 years or 3 years if you take a very conservative metal price.
Mm-hmm. Why I'm asking about the 13 years because just again margin, what you said, right? Looking at the margins year by year, as well as again thinking about CAPEX as well, and essentially thinking about why not come out with a smaller but more profitable operation where like the first 6 or 7 years are stretched into call it a decade plus with a smaller processing facility, lower CAPEX, but also maybe more profitable on a margin basis.
We look at it. We had that's a good question. We tried to do the case where we don't encroach down, and we stop, short of encroaching the town, and that project was not profitable enough. Was not the magnitude of it was very small. I mean, we would not move the needle on anything, and the fixed costs of building the process facility and the tailings disposal facility is such that there is a limit, under which the project didn't exist. We we look at it. I mean, if only for not encroaching the town,
Mm-hmm.
and it was not, financially, it was not financially and
Yeah, in terms of margin.
visually.
Yeah.
Yeah, the margin. It would have been just a little uh, drop in the bucket, and it would have not been worth all the energy. It's the same fixed cost for us to bring this project or a bigger one to fruition, but the small one, there was no financial reward really for it.
Right. Yeah. Well, your study here it does front or your plan front loads higher grades in year 1 to 6 to what you're talking about here at the beginning is just over 1% copper equivalent. So that's why I'm asking. And so equivalent, it's about as you said 2/3, 70% copper more or less. What what controls that grade lift geologically in those first 1 to 6 years? How sensitive is it to schedule slippages? I suppose between phases.
Uh, it's not it is not that sensitive to slippage because uh, to start with, a lot of those structures are going right up to surface. And even better, where the former mill of Falconbridge was located, it was actually over very good structures that, they stopped mining underground those very rich zone because they were underneath the mill at the time. So I mean, there's always high grade ore along the whole life of the mine. It's just what we're doing here is that we're stockpiling some of it at the beginning. We're stockpiling the low grade, and we're just processing the higher grade. But the distribution of high grade is through the whole project.
Yeah. Yeah. So geologically, is it different? I mean, yeah. Is the higher grade in a different host, or what does that look like?
Yes, remember, we can go back. You can go back to some of the old uh, presentation from this summer where we showed the difference. We had the structure, a cut of the mine with the structures, and then with the stockwork around it.
Hmm.
So the structures go right down to almost, the bottom of the mine at 3,000 feet. It is there, and it is high grade, and the stuff around it is the low grade material. So there is a way. There's always going to be higher grade. It's just at the beginning we're just parking the low grade on the side and we're mining it. Maybe let me see here what I can show you something. So this is the grade expressed in NSR per ton. Okay.
Okay.
And
Yeah.
you can see that it's going. There is a plateau for the mid years, and at the end, this is the stockpile going out. I have a I have a maybe a different one. That explain more or less how the 1% or the 1% equivalent is coming from. So the whole phase one and the beginning of phase two are here, and basically this is when we get the best grade. But we're also stockpiling, and some of the stockpile come back here. And that's what permit us to do that kind of thing. This is like textbook mining where you front end your grade and you always go with the highest grade at the beginning.
Yeah. Also asking
And
because, and maybe it'll make more sense here in a minute, but your strip ratio has improved in the process as well. What's doing the heavy lifting in that? Why
oh
is it better now?
well, it is better because of the stock work.
Hmm.
Remember, initially, when we put out the MRE in June, the MRE strip ratio was about 4. And at this point in time here, we're about at 3.7 for this project. So I would say that, the 45% of the MRE rock that I left behind had probably a little bit higher strip ratio than 4. So if I was to do another phase, it would be probably around, a 4.5 strip ratio for the next pushback.
Okay.
Is it?
Yeah. Well, how much of the strip ratio depends on the slope angle assumption by pit sector, I suppose. This is where that ties
It's
in.
it's very dependent. I mean, the strip ratio is driven by uh, the slope angle.
Yeah.
Absolutely. Now, this is part of the study that need to be done in pre before the pre-feasibility is launched. Let's do some geotechnical. We use 55° in the report, and we used it because I could demonstrate to the QP that there is a open hole on site that goes from surface to about the third underground level, and it's almost vertical. It's been there for 45 years.
Hmm.
So on that basis, what we call empirical basis that shows that vertical wall can stand for 250 feet, almost 300 feet high for 40 years. We think that we can do 55° on 3 sides of the pit. The one side where the ramp is, which going towards the town, that slope is is lower than 55 because there is the ramp is in it, and there's actually two ramps. So
Right.
it is flatter going towards the town.
So what happens if those angles soften by, I don't know, 5 degrees
Well,
or
if the
up?
angle softened from 55 to 50, yes, the stripping ratio will increase slightly, or the pit floor comes up.
What happens? What's kind of the effect? I mean, in percentages to your MPV.
Oh,
Let's say 5 degrees.
I haven't done, well, we haven't done any. I haven't done any sensitivity on this. I mean, we would have to rerun a total mine plan. So,
Yeah.
I mean that's. I mean, look at it this way: mining costs $3 US. Mining costs for a ton of rock. So if you put the stripping from 3.7 to 4.7, just to make round number, there would be 77 million ton of additional material to get out
Mhm.
at $3 US, $200 million US over 17 years. Well, it's not exactly 17, it will be over 13 years.
Yeah. Yeah.
Okay. But it's not, it never go to 4.7.
Right.
The, okay.
Okay. So a 5 degree change wouldn't push it that high.
Oh, no, it won't push it outside. No, no. Like I said, it's going to be decimal impact on the rate of return.
Yeah. Okay. This is, I suppose, where it kind of comes together for me. But the NSR continuity kind of looks patchy on the cross section. You have a cross section on the presentation with, or on the news release with, kind of all the colors there. The fact that it's kind of patchy, could that pose a problem for production or processing continuity?
No, 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 no. I mean, this is, that is a cross section within, one part of the pit. Though there's 80, there's close to 80 veins of high grade. When we call the high grade zone, there's 80 veins that have been uh, mapped or put into the resources, and they all have those high grade zone within them. The continuity here is just one image out of everything. It's there is a thickness to this, and I would say 100 meters down, it could be a different view.
Mhm.
There is, I mean, it is what this does here. It's more. This is the one here. At the end, this is what you've seen in terms of grade continuity and applying a stock a stockpiling strategy on top of it. This is what we can do with all this.
Mhm.
And I can tell you that in June, when the MRE came out, and we look at the impact of including the lower grade material, the stock work around the high grade zone, and we said it's a game changing thing. You know, I was saying this. I could see the flexibility of being able to do that at that time, and this is the result that it gives us. Having the possibility of managing my grade to go along a line like this is perfect. I mean, there's no jump, there's no and this is like this is a PE. I mean, as we refine the mining sequence, we can probably make it even better than this. I mean, that little drop here versus that chunk. I mean, that we should be able to make it even smoother.
Yeah.
There's only you know, the hour of engineering in the PE are counted, in hundreds. I mean, there's probably 1,000 billable hours that
Mm.
have been used for the PEA. There'll be like 20, 30 times this or more for a PFS, and even more for a feasibility study. But when you can do those kind of things uh, with a project, you know that I always have some high grade material that I can push ahead.
Right. The historical reserves and mine maps, they also show kind of like a east-west shears in the Gabbro. How does your domaining deal with those structures, and where is kind of the weakest continuity versus the historical headings?
first of all, it's east-west in what we call the Springer pit, and it's north-south in the Perry pit. And this is where the saddle, which is in between, is causing us problem because we don't know in which direction it is right there because there's been no mining. The continuity is very good. For the high-grade zone, the continuity is very good, and we have no issue at all on that basis. Uh, it is those structures are in hundreds of meter in strike and hundreds of meter down dip. I mean, it goes down to 3,000 feet. What is it? Almost 900 meter. And some of them are, 1 kilometer long, that you can trace on surface almost.
Mm-hmm.
So, we have no issue with the continuity and the thickness of the stockwork around it has been determined, arbitrary by the QP to, using 30 meter, and the grade within that 30 meter is uniform. Like it doesn't decrease from the high grade zone to the borders. Like as it moves away from the high grade zone, it still maintain its grade. So the grade of the stockwork is homogeneous,
Mm-hmm.
which also is a good thing.
Where I'm coming from with this is because the risks that you talk about in here as well, or that your QP talks about that are disclosed in here. They talk about open stopes in the eastern pit wall, the ventures sill dipping toward the wall, and impossible Gwym fault water inflow. All of these things are quite abstract to me as a non-mining engineer. What does this really mean? How do you deal with those
Okay.
risks?
Well, first of all, there is open stopes,
Yeah.
and the open stope, some of them have been backfilled with old tailings. Some of them have been left open. We're gonna have to be careful when mining. We use radar and probe holes ahead of time, since we know the mining was done by a good company, and we have all the records, so we know exactly where the things are. We're gonna probe, and if there is an open hole, we're gonna have to backfill it with low grade or waste. So
Okay.
I mean, it's been done. We've done it in when I was at the Golden Queen in California. We had the same thing, and we didn't even have maps because it had been mined in the 30s, and we had no records. Uh, it's been done at Malartic. It's been done at Detour Lake. That's not an issue. Now, when you want to design an open pit and you have you're building up your wall, obviously you're trying to make like let's see, a slope at 55-degree. If your slope line is to cross an a void, basically, at that point in time, you have a vertical wall or some overhang, and that would force us to either push back uh, the pit wall, or stay away from the open stope, or find a way to backfill it with cemented fill, and then cut it back again. But if the rock mass integrity doesn't exist, well, then you get some stability problems.
Mhm.
Okay.
So,
Now that again, I mean, you don't know that, but my master in geomechanic and control blasting, I I'm not losing sleep over this at this point. Okay. Now, the point about the Gwilym fault and the fact that on the south side of the Gwilym fault there might be some water. This is an unknown. Okay, and we have to probe this before doing the pre-feasibility study, so that we have the data to look at it and be able to assess it at the PFS. What kind of dewatering do we need, if any, and how is how and where are we going through the Gwilym fault, and maybe we just if we breach the Gwilym fault at the top end of the mine, and basically there's no the water table is below that on the other side of the fault, that's a non-issue. But the The disclosure is there for the investor to know all the risks. So it is there, it exists. We know about it. It needs to be we need to get the data at the PFS to be able to assess the real thing. I mean, the same thing with the I can give you something in reverse. In the PEA, we assume that all the waste is potentially acid generating. So all the 280 million ton of waste plus the filtered tailings are installed on a membrane. And we got 2.8 square kilometers of membrane, and we build a mountain on top of that uh, on that basis. Now, my VP geology wants to take my head off because he says, no, the waste is not acid generating, there's calcite in it. It's acid neutralizing. So certainly, if I trust my geo, it's not all the waste that is acid generating. And therefore, a good chunk of it doesn't have to be on the membrane and doesn't have to be put that far. Actually, we could get rid of that material if we can make an aggregate out of it. I mean, people will take it. I mean, so that, on the other hand, is in the PEA, and it's fully cost as is. Everything was acid generating right now. Before the pre-feasibility will do enough characterization to figure out if there is some non-PAG material that doesn't need to be treated the way we're treating it like this, and I'll be saving a lot of money on the disposal.
You're going to need more geotechnical and hydrogeological drilling then in that case, or
everything. I mean, let's be honest. This company has been laser focused. Before my time, they were laser focused on get a resource. And then, they hired me and they say, get a PEA. And, we can do a PEA with the material and the information that we had. And we did it. Now, the PFS to me is the most important study. This is the one that defines the project you want to build. And to be able to do a proper PFS, we're going to have to do a number of studies and complete the one that we have already to make sure that we have enough of the data that we can do all the trade-off and all the analysis.
Mm-hmm. How much money is that going to cost?
It's going to cost probably, I would say, $3 million. I mean, that I'm going thick on it. I mean, I'll be happy if it costs only two, but I'm giving you a number that I know I'm not going to go over.
Mm-hmm. Because it's essentially about de-risking, right? I mean, this is
exactly.
Yeah.
If I don't spend it now, I'm going to have to spend it at the PFS. But you have to spend it. Going to construction with only 5% engineering done on your project. This is how you get all those kind of shitty results and I mean, cost overrun type of thing. I've told you many times, under-promise and over-deliver. So we'll do the study. I'll know what I need to know ahead of time to be able to take the best decision.
Last time we talked about what the concentrate might be, or we talked about the metallurgy, really. Your flow sheet targets a 20% copper concentrate here, which, as far as I understand it, is below the threshold of what smelters like buying. It doesn't mean they wouldn't buy it, but as far as I'm aware, they like buying above 25, so call it 26%. Who do you think will end up buying the concentrate? Would that be a challenge? Will it stay at 20% for the PFS? And talk to me more about the concentrate.
Okay, so I would say in the first 6 years, when we're loading it with more copper in the system, there is a potential that we can get higher grade concentrate. And maybe at the back end, maybe it's going to be a bit of a lower grade concentrate. The important thing here is that we have no nasties. And there is a lot of precious metal in it. So it's going to be a sought after concentrate.
What's the arsenic or bismuth grade in concentrate?
Nothing. There's never been any arsenic or bismuth or any other nasties in the historical concentrate, and I'm not expecting any in this one.
I believe historically the mine did ship a 25% copper concentrate was to Noranda, to the
Yeah,
Noranda smelter. Yeah,
they were mining 2.25% copper.
right.
Okay, so it's all about there is it's an arbitrage. Okay, you can do I can do a 24% concentrate, but my recovery is going to be lower. Believe it or not, my copper concentrate, my copper recovery could be in the 80s, mid 80s, and I can make a higher grade copper con. But I'm leaving money on the table.
Mhm.
At the end of the day, the arbitrage is get the maximum pull. You know, if it brings your concentrate level at 20%, I can still sell it. I mean, everybody wants copper. Everybody wants the clean copper con because they use it to blend with the copper that has a lot of nasties in it. And basically, they use it to reduce the grade of arsenic or bismuth or any other things, that there is in the garbage concentrate, and then they can sell it in the country where there is some threshold for the nasties. This is how the business works.
Mhm. Have you talked to Noranda slash Horn, I suppose now?
No, no, but I haven't talked to them about this. They they know about our project. They they talk to me about the timing and the quantity and that type of thing. But right now, the actual marketing discussion, no. And let me educate you a bit on the concentrate business. I use 40 and 4 for TC and RC for this project when it's actually negative right now. Okay. The best deal, and if when we do a PFS and an FS, we'll use the second best deal we can get in the study. Okay. Right now, in the PEA for what I would call a quick execution, we assume that all the concentrate goes to ORN, and it's very easy. You know the tonnage, you know how much it costs to move a ton of material on the road in Abitibi, and you just make the multiplication and so much per year, and you get, within 15 minutes, the QP engineer was able to get the cost of transportation, and that's it. Now, at the PFS, we'll assume that it's going on rail. First of all, for risk management, I'm never going to put a truck per hour, 20 hours per day, 17 years in a row to truck from Chapais to Rouen. Anyone that does risk analysis will tell you you will kill so many people. That's easy to do. And and I don't know how many people, but I know that it's more than one on a risk analysis basis. So you put your concentrate on the train. Once it's on rail, it can go anywhere in the world. Noranda or ORN will not give me a friendly deal. They will look at what is my second best option, and they'll price themselves a few dollars, let's say $10 or $20 a ton, below my second best option, and they will capture the freight arbitrage. And this has been the business of the smelters or the trader since copper has been invented, I would say. No, I'm exaggerating, but even if I was underneath the mine or the smelter, so if my mine was underneath the smelter, they will not give me a friendly deal, a neighbor deal. They will price themselves to be my best alternative, but only $10 or $15 better than my second best deal.
Mm-hmm.
But once it's on the rail, it can go anywhere in the world.
Yeah, that's a
And
good.
I'd like to sell, by the way, I make an ad. I'd like to sell my life of mine concentrate offtake because it's a financing item. And when you do a financing package, someone can pay you front-end money for the right of buying a concentrate
Mhm.
at market because it's a commodity that is sought after just for the blending part.
I was going to ask, is that realistic? How did you think? Why do you think that could happen? But I suppose for the blending part, is that it does make sense. You
I've
do
been
go ahead.
I've been in the business, in the copper business since '98. This is how it works.
Hmm. Well, you do talk about 92% copper recoveries to your point. That's the average, I suppose. Is there a lot of variability by lithology or alteration in the recovery?
The recovery would be function of the grade, more or less. But it's the same. Chalcopyrite is chalcopyrite, and it is not. It's going to depend on if you want to leave more time in the system or not. But we're not. I'm not too concerned about the overall recovery. It's an easy material to recover.
So, well, overall, over the entire resource, how variable are recoveries? Like, what's the lowest you get versus the highest?
I'll be honest with you. I haven't checked that level of detail. Uh, it is variable, and it's going to come down at the end when you're doing the stockpile. I would. I'm not a metallurgist. I'd be inclined that if something has been on a stockpile for 10 years, probably oxidize a bit, and the recovery will be lower. But I don't think this is assumed in the PE right now. But just because it's 0.35 material, I mean, there's guy out there with 0.35 material that get 90% recovery. So it would depend on how fine you grind or how long you leave it in the system, and you if you spend the money, you can get most of it.
Copper is not the only thing you're recovering, though. You have silver in the system too. Does it make sense, though, to recover it? Are you recovering enough silver where it's actually a payable,
Yes,
where it actually makes money, essentially?
yeah, it's making I don't I would say between you and I, but there's probably like thousands of people who are going to hear that. Uh, Silver is about 2% of the revenue, the gross revenue.
Hmm.
So it's not, I mean, it's coming in with the gold, the precious metal, but it is payable in the concentrate.
Yeah. What does the PEA say about power here? Where is it going to come from, and how much of an upgrade does it require?
Well, power will come from the grid, obviously. We've got a power line that goes across the property, but we'll need a substation and everything. It will be around 35 megawatts uh, power requirement right now. If and when we add battery electric trucks with recharge and everything, I might need a bit more, but that's going to be when we do the PFS or DFS. Like I told you earlier, at this stage in the PEA, it's diesel trucks because in that size category, they don't exist in battery version. But it's a small mine of relatively speaking, it's 35 megawatts is not a, a large load for a mine.
I believe historically Opemiska piped process water essentially for about 5 miles from a nearby lake and made sand fill from the tailings as well. How are you dealing with water in this plan?
Well, at this point in time, the site uh, is a positive balance. All the underground openings are underwater. I mean, we've got their fill right up to surface. So we're going to have to dewater as we get at depth. We have to dewater the underground mine. We're also having, because of the way we're going to be doing filtered tailing, we get our water right away. I mean, it's not like dropping a slurry at 30% solid into a basin and then letting the thing to sediment before being able to collect, I would say, cleaner water at the top and recycle it, we get our water back immediately. Uh, the assumption that we need water uh, right now is based on the fact that we can get enough water on site to manage our pit. However, it will certainly need extra water as we get deeper and they water the underground mine. Uh, See, there's rough number 25. They mine 25 million ton. Assume a density of 3. That would be 8 million square meter of water under right now that is available. And then, we recycle. The only water you lose is basically the water in the concentrate and the one that get stuck in the paste tailing uh, for a period of time.
Right.
So, at the PE level, we didn't really look at a total water balance, but it's not like we're in the desert.
Yeah. Well, talking about tailings, you propose filtered tailings and co-disposal, but the feasibility of filtration and foundation behavior are, well, you call them not yet established. What are you doing with regards to those, and when will they be established?
Again, it has to be done before the PFS because we need to find a site that will be able to carry the load. Basically, we cannot put this over a, 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 a bug area, marécage. So we need to find we need 3 square kilometers of land on which we can build a 500-foot mountain.
Yeah.
So it needs to have the bearing capacity to hold it, and not if it caves slightly. I mean, the membrane that you have underneath will stretch and break. So that's the idea. You have to make sure that the foundation are good enough, and it may require putting some material and compacting it such a way that it can support the load. I mean, that's the kind of thing that needs to be done. Again, you're talking to a geotechnical engineer. There's no issue with that. It's there. It has not been done at the PA level, so the QP is telling you the warning. It has to be done.
How well did the previous operators deal with it? And I mean, was it done in a quality way?
Listen to this. Previously, it was a regular slurry. It was a dam, and you would just pump slurry, 30% solid behind the dam, and let the thing like beach and have a water pond developing, towards your dam, and the water the fine in the water would sediment slowly, and you'd be able to pump some of it back to your mill, and then as you times passes, you just put a new higher dike. You build the dike higher, and you keep pumping stuff behind it. This is what we call the old-fashioned tailing dams that you hear so much, unfortunately, on the news that fail. And believe it or not, Falconbridge decommissioned the site, and around the year 2000 and something, early 2000, they give back the site to the crown and get away and said, they get signed off. Everything is fine. Everything is nice. And a few years later, the dam breach, and all the slurry gets into the river and takes the road and that type of thing.
Yeah.
So to me, it was absolutely not an option to rebuild the same thing in Chapais. I mean, already we're going to impact them with the mine. We're going to be encroaching on the town. And then I will tell them, oh, listen, I'm building the same thing that was built in the past century, except it's going to be 3, 4 times bigger. And, it's going to be right, at your doorstep. this is the way for not getting a social license.
Yeah, yeah.
So what we're doing is a bit more expensive, and like I said, we we cost 100% of the waste to be on that pad. In the end, it's probably going to be much smaller. I don't know how much smaller, but if I trust my geologist, it will be smaller, but it's going to be much safer. It's from a water usage, it's much better. And I think this is I don't want to say it is the future, it is the present. Okay. You can probably do it if you're way out in the desert or somewhere, but I would not do this any close to any urban area.
What is the plan for dealing with uh, legacy tailings or any remaining underground sort of sand fill interaction with a potential water pit dewatering, I mean, or ARD risk or something like that?
Well, there is very little ARD risk at that site. Okay, from my personal view, the tailings, the historical tailings, once the dam breach, all the water disappear. So the actual tailings over there have been exposed to 20 years of rainwater and snow percolating to it and escaping. There's no dam anymore. And my environmental QP and mining QP went on site 2 weeks ago, look at the tailings and what's left of them, and there is no sign of acid rock drainage. There's no sign of rust anywhere, and actually, there've been a lot of it has been it's grassland now when it's been covered, and there's a lot of green working on it. We, as a company right now, the tailings are, I would say, out of the fence. I cannot, if I touch it, the government will be happily giving it to me. So we're not touching it. However, the moment we put a shovel in the ground, I will use those tailings as an area where I'll stock the overburden, the soil that will be used for the rehabilitation at the end of mine life. This is where I'll put it.
Right.
It's
Yeah.
a nice flat area.
This also reminds me, by the way, old Opemiska, historic Opemiska was mined underground, right? That's left empty voids, stopes, and areas filled with those old tailings, backfill essentially. The new PEA wants to kind of, well, obviously we want to dig an open pit over and around that sort of honeycomb, if you will. How does that influence your proposed open pit here?
Well, we discussed before. As the pit comes down, we have to probe. We know where the openings are. We're going to probe ahead of us to know if we're hitting an openings or backfill. If we get backfill at this point in time, we'll have the choice of deciding if it goes to the mill or if it's called waste and it goes to the waste material, but it's counted in, and it's going to end up in the waste pile.
Well, and you also talk about that in the risks. I think in the
Yep.
in the report here, you talk about where historical asset validation is indirect, so you didn't do it yourself, and that digitized stopes may not perfectly align with the current 3D models. Is there any, I don't know, extra drilling or surveys that you have to budget for to de-risk or sort of the
Yeah.
early years of feed classification and kind of
Okay.
reconcile those models, pre-PFS?
It has to be done pre-PFS, and I'll tell you why. In a PFS, you cannot use inferred as a mining feed. Okay. So it's half of my tonnage, more or less, quick number. So I need to do this before the PFS so that, my inferred becomes indicated, my indicated becomes measured. And this was in the chapter 12 of the MRE, where the QP said, there's a discrepancy between where the opening should be and where it is indicated, and because everything is attached between the levels, all the openings are attached to those level, they're off you know, an underground drift is usually driven at 0.5% upslope so that the water flows back to the shaft, can be captured and pumped out.
Mm-hmm.
What happened is that when we draw those openings, it was even before we had an MRE, okay? It was at the beginning of the project. It was done on a straight line. So close to the shaft makes no difference. A kilometer away, it's 5 meter off. 5 meter, when your drift is 2 meter high, 5 meter is your drift is way out of where it should be. And everything attached to it is now, the coordinate of the various drill hole color don't fit. So this is what the QP noticed, and he said, because of that, I'm bringing everything down because you're not exactly where it should be. It has nothing to do with the density of drilling or the quality of the work or anything else other than we didn't model the opening properly. I have already a inbound bid for doing it. I mean, at Thierry, we had at Thierry, there's two zones, the old underground mine and the new zone. We had all the underground opening of the K2 mine done by a consultant in 3D, and it's good, it's perfect. We asked those guys, can you do this at Opemiska? There's much larger number of openings to model, but since it's already been done, it's only a matter of fitting in the grade and I would say reclipping the openings properly. It's less than $100,000.
Mm-hmm.
I have to do it before the PFS.
Right.
But
What it,
yeah,
so you said $2 million for all the other work that would be de-risking it. What about everything else? And what's the budgeted drill plan and how much money do you have to spend between now and PFS in total? I mean, because I know you want to drill other stuff as well, so it's not only hydrogeological and other de-risking drilling, but I think you also want to drill other stuff. So how much money do you need between now and PFS?
as much as I can. There is we have to look at two types of money: the flow through shares and the hard money. Okay, the flow through money and the hard money. So we have right now we started to spend the flow through money at Opemiska for drilling the Cook project, and we have $3 million of spending. I can do some drilling and some work that is related to, I would say, adding on the resources that could qualify as flow through money on some of the things that needs to be done before the PFS. However, once we start doing the engineering study, it's basically engineering time that get billed every month, and depending how fast you go and how quickly they go, it's a monthly thing that we're gonna have to figure out. And I got $2 million of art dollar left, only 1.9, that will bring us to mid-year next year, probably depending on how quickly we spend it. Uh, our our base, we need $1 million to keep the lights on and do the basic work. There's another $1 million we can spend more or less on studies. But after that, they a mining company, a junior mining company, always need more money. Uh, we can do everything we said that we would be doing last time we talked. The PEA, drilling Cook and drilling Thierry, all this we can do it with the money we have. We can start some of the basic engineering study next year and pay for it. But eventually, as those engineering studies, move along the S curve and start being, more and more billing hours added, obviously, we'll need some money at that time. But we are not in a big rush to go to the market. I mean, we have plenty of money to do what we want to do until I would say this time next year.
Okay. Well, uh, how much of the PE are you targeting to be moved over to a PFS scenario? I mean, with the classification and everything.
You have to repeat that question. You're talking about the resource?
Yes. What percentage of the resource do you think it's going to move from
Oh,
PEA
okay,
into PFS?
yeah. Okay, so let's assume that the 77 million ton of ore mill in the PE, I would think that we should have 80 million ton or more so at the PFS. Is that the answer to your question?
Yeah, I mean, it depends. It's essentially what I'm asking is how big is the PFS going to get?
In volume of rock
Yeah,
mill or
yeah,
site? Or
yeah.
it's gonna stay around those limits. I mean, it it would need a big movement in the metal price to expand or shrink the pit on which we're working right now.
Hmm.
See, the MRE pit of 140 million ton, this is this is the pie, and basically we're getting a piece of it, and we're saying, this is what we're going to send to the mill.
Right.
And what we left behind, it's because from an NPV point of view or a cost point of view, it was less attractive than what we've taken. Okay, not all the tons are the same profit. So the to make a bigger mine or a longer life mine, or go say, you know what, we're going to go from 12,500 to 14,000 and still be a 17 or 20-year mine life type of thing. Uh, it, it is really the metal price. Then we would have to demonstrate that the pit wall need a 45-degree angle type of thing.
Hmm.
Uh, what else? That we're totally wrong with our cost, and then the pit floor comes up because we cannot go as that deep. Those kind of things.
Right.
But other than that, I mean, other than major change in assumption, it will be near the same project. The actual way of doing it may change. The final pit limit may change, but the size, the envelope will not go over 140 million ton. But I don't think, and I think we're at a good place. But if it could be 75 or it could be 85 at the end, we'll see. It's the drilling and the way we deal with the saddle zone as an impact, because the saddle zone, we're mining on either side of it. So every little move forward that the geo can give me, that block of rock, if it becomes ore, it's going out very quickly because it's been stripped on either side. So it doesn't have to support big stripping. So imagine taking a block of ore that is right smack in the middle of the Springer pit at 250 meter. To take this one out, you have to take all the funnels at 55-degree on top of it. That has not been taken out yet. But when you're operating on the opposite, when you're trying to get a block in a peak and it's been mined on either side, the it doesn't have to support its weight of waste, or its 3.7 time waste, and it goes out very quickly. So there is, for us, the saddle zone is a mystery, and we need to solve it. And if we solve it, we could quickly have 2 more years. I mean, 1 year is 4.5, 4.7 million ton of ore. So it can go up very quickly if we resolve our understanding of, not resolve, let's say we get a better understanding of the saddle zone, because
Is
it's already been stripped on either side. So I mean, man, it's if it's ore, it's going to the mill right away.
How much drilling do you think you need to resolve? Well, not resolve, but to get a better understanding of the saddle zone?
I'd like to say, I'd like to say the minimum. I was talking with my VP exploration an hour ago, and we were talking about the budget for next year, and he wants to put more holes in there, and they say that they're drilling at Cook right now, so my geos are going over. They're doing turns at the drill and in the core shack to get the new rock coming. So they're meeting in Chapais, what I would call the geological brain trust of the company. And in their spare time, they're talking about the saddle zone. And they're playing on the model and everything. I force them to think about it all the time.
Is
There is a lot of money locked in there. Find it.
is it well, to that point? Is Cook gonna make it into the PFS?
I'll let you have a view on how my brain works. Dangerous. When I joined the company, we look at this, and everything was Springer and Perry, and there was the Robitaille and Cook Zone, and Denis and I would look at Robitaille. Denis call the VP Exploration. Robitaille is one or two zone parallel, almost vertical uh, dip. They mine it to surface, and they left an open hole. To return there, you would have to backfill, and then you would be mining the low-grade material they left behind, and almost on two trenches on either side of that opening. And because it's vertical and it has very little thickness, the map makes it, it would be a lot of tonnage before you get to the end of a final pit. I mean, as opposed to Opemiska, where I got many of those zone parallel, and it's really, I got a family of structure. So I've got breadth, I got width, but Robitaille, nothing like this. We haven't found it yet. Cook was more interesting because it was gold, and we started with a five, two zones at 5 grams per ton head grade with 0.6% copper. That was the historical material sent to the mill. And the crown pillar is left intact. So what I asked the guys to think about is the opposite of what geologists usually think. Don't give me a resource made of intercept at 5-10 meter interval. I mean, or 10 meter maybe, but the 5 meter I'm not interested. I mean, the shovel are the size of a conference room. You have to think in this order of magnitude. So basically, I asked them to smear the grade to a thickness that can be used for open pit mining. Can I get something over 20 or 30 meter thickness? And if so, what's the grade? We know that the crown pillar is in some area down to 200 meter. I mean, they mine the underground mine, and they were moving to surface along kind of a triangle
Mhm.
way of doing the thing, and this is how you do in mining. I mean, you move up and then you go to the side. So in some area, the crown pillar is not very thick, but at the ends on both sides and on strike, it is very thick. So first of all, is there gold there? That's the first question. Second, we know that the structure is about exactly 680 meters, so 700 meter long. But does it extend further on that we cannot see because of cover or whatever, or it has not been defined by the Falcon Bridge geologist? So we're going to be drilling across it. Now, they were mining 5 grams underground in stopes that were 5 to 10 feet wide, 2 to 3 meter. There is gold in the walls, and what we don't have a good view on is how how does that fade into the wall? And we're going to be drilling from far away and going to be entering the zone, and we're going to get increasing and increasing grade, and then we're going to hit the quartz zone where it's high grade, get out of it, get to the next one, and then get to the footwall or eyeing wall, depending on which side we're drilling.
Mhm.
I want to understand, if you're making something in the 20-meter thick, what would be the expected grade? And my aim is, if I get something in the last year, it was 0.5 grams when gold was $2,500.
Mm.
At 4,000 or $5,000, what is the current value of 0.5 grams is more, it's around 80 to $85 Canadian, gross value per ton. I hope you're going to do the math and correct me on paper if I'm wrong. But last time when we're doing this on the blackboard, I think we came to $85 a ton of gross value. If the pit is 3 kilometers from where the mill will be built, it's like printing money. I mean, remember I showed you the NSR value of my tons in the first 6 years, and it starts at $97 and it goes down to $80. So more or less, that would be as good ore as the first 6 years of mining.
Mhm.
If I can get, half a gram, or maybe if the price of gold is higher, 0.4 gram average. And then, what kind of strip ratio do I have out of this? If the strip ratio is 10 to 1, doesn't work, because then, it's basically, it costs me $30 to $40 to move it out of there, and it might kill the economics. But
Mm.
we're going to do, we don't know. So we do 6,000 meter along strike, at different depth. We're testing it. Then we sit down and we look at the number and we see what we can do and what kind of intercept we get, and how we can play with the number. And basically, if you hear us saying that we're going back for a second pass, you know that we're saying something. If you don't hear about Cook anymore, you get your answer. Uh, but remember at Thierry, when I showed you the slide at Thierry, what
Yeah.
the historical resource was 5 subparallel zone, and we look at this and we said, no, we're going to mine it from one side to the other. The grade would come down, but the cost would be better, and overall, it's a better project. So we're trying to do the same thing here, except with gold, it is it's much more variable than the uh, the copper ore at in Perry and Springer. So my guys need to think about the nugget effect, and how this can influence. We can have very good grade in some area and very lower grade elsewhere, and we have to understand: is it because we missed the zone, or is it because nugget effect? There'll be a lot of questions that we're not used to ask ourselves with the copper zone, but there is a good potential over there. Historically, they mine very good grade. We need to have a look at it, if only to be sure that we're not leaving, I would say, money on the table, but leaving good value rock out there.
Yeah.
Because if there's nothing, maybe we'll use that site for
Mm.
dumping something on top of it, and that'd be the end of it. So it's a form of making sure that it's a good time to do it. And by the way, we're also looking a little bit north. There's some copper. There was some copper, historical copper grade. So while the drill is there, we're looking at it, but don't get too excited. We're not going to make another mine north of Cook. It is to the very long term. But since the drill is there, let's have a look.
Well, and I think the near term question here is what ends up in the PFS, right? So what is it going to be in the end? Do you think that any new
Okay,
step outs that you might be drilling, or step outs that you might be making
okay.
that are going to make it into the PFS?
Unless it takes a long time for the PFS to appear, which I don't want to do that. And I don't think that Cook will be in the PFS because the gold will need a much tighter drill pattern. And by the time it takes to do it, and knowing that we prefer to drill when the ground is frozen, it may be a season too late, but it will be, if it's good, it's going to be in DFS. Okay.
Yeah.
Uh, the there'll be at least one more drilling program in the saddle zone. The QP that did the resource in, in the Springer and Perry indicated that there was some stock work material that could still be available with the proper drilling. So once with or without, getting our opening in shape, but we can go back to the QP and, give us some drill target where you think that, with higher density, you would move uh, that stockwork material into the plan.
Mm-hmm.
But we're talking, if it's 10 million ton, it's still another 2 years of low grade, mind you, 0.45, 0.42 average, but it's 2 more year. And we might lose something at the fringe because of higher cost next year or something like this. So right now, I would say if you're planning on 80 million ton of 0.7, today's number is the best indicator of tomorrow's number. Let's put it this way,
Yeah.
until it changes.
So essentially, how much effort are you going to be putting in step outs though? In that case,
Well, we're not going to do too much step outs. There is a zone. There is a zone off Perry where there is, curiously, it's called the Mechnical Zone and the Bouchard Zone, which happens curiously to be the name of my geologist and my geotechnician. I don't know how that happened. Uh, it's zero point 0.3 to 0.4 copper. Uh, Difficult. I mean, it's identified. Uh, it didn't. It didn't make up a pit when we did all this in the first place. Again, we we don't see very much thing outside that can be mined at profit right now. I mean, the high grade zone is really driving the bus, and then the low grade stockwork around it support. It's basically dilution with mill grade ore. Uh, when we go outside, it, we're missing all those parallel zone that basically makes the volume. If you're only looking after one or two parallel zone, same as rhyolite, it's the same math comes in. You're looking at longitudinal structure, and if they're dipping more or less vertical, you get the end of it from a mathematical strip ratio point of view. You get to the end of it very quickly.
mm-hmm.
If I had 20 of those zones side by side, now it's different game because I can come in with the big equipment, and every trench that I take, I've got many ore zone to gather, or I just blend everything and I just make a lower grade and everything is ore, and like we said at Thierry, and we grab everything in one shot and it's nice mining. No, you see the waste is on either side, and everything in between is ore. But when you have only two zones, even if they're nearby, especially they're low grade, I mean, they cannot support the waste in between. I cannot say I'll mine both of them together, but the waste in between will dilute the thing to grades that I cannot support the cost. So right now, there's potential outside. There's other zone. There's plenty of targets, but in the pit or near the pit, it's really the saddle and cook right now.
Mm-hmm. Yeah. I suppose we can talk mining here without talking about the good people of Chapais, who you've brought up a couple of times, but you went there for the PA, I believe I saw a video somewhere. How did the talk go?
The talk went very well. First of all, it was very important for us that when we put the news out that we are in Chapais to tell the people in person. I mean, the last thing I wanted is that, people hear just to news release or, the press release or the PowerPoint on our website.
Yeah.
So what we did is we made the announcement at 4 o'clock at the close of market on Tuesday. At 4:05, we were at City Hall talking with the elected officials and some of their right hands. And then at 7 o'clock, we had a town hall and there was 70 to 80 people attending. We explained to them, first of all, what we'd been doing over in their town for 5-6 years. We explained what a PA is and what a PA is not. We explained to them also what, consultation is, when it happened, and our view on pre-consultation. And, we'll discuss this in a few minutes. And we also then discuss of the virus impacts and, the fact that, there was some requirement, basic constraint on the project that we built in, long life of operation, the mill within the city limit so that it can be assessed, ensuring that the family lives in Chapais, that we attract family. This is unfortunately is not in the PA, but we can discuss this too. How we treated tailings for the benefit of the town of Chapais. And the most important thing, what everybody was waiting for, how much encroachment are we going to do in Chapais? Mm-hmm. And the discussion went very well. And, we showed the picture of the encroachment. You can show it in your thing. When people saw what I would call the relatively small encroachment relative, I think, to the expectation, and this is funny, I think there was a build-up expectation, I think, for a worse case than the one we presented. I know some people had told us that, we were eating up half or 2/3 of the town. And, I always said, I don't know where you get those figures because it's not what we're going to show. But until you have a technical report, you cannot really talk about those things. And like we said once, once you see it, you cannot unsee it. So I would rather show the figure that we showed them 2 weeks ago than draw a line on the map, and then when the technical report comes out, it's never the line that I had drawn. So at least, when we showed the encroachment, honestly, there was no reaction in the room. And when later on, I just happened to say, and by the way, Road 113 will be moved to the south. Now, the owner of businesses said, oh, wait a minute, what is this? I mean, how can you move the road? And, we're going to lose some businesses. And this is an impact that we have to discuss, which brings me to consultation. when you go to permitting in Quebec, at some point in the process, there is a compulsory consultation session. Now, it happens during the permitting process, so you're permitting the project that is defined. So it's your it's your feasibility project that is the basis of your permitting. By that time, the project, I would say that the project is done. It's designed. And you will have behind you something like 4 or 5 meter high of binders
Mhm.
describing the project, all the analysis, the baseline, the environmental, everything about plant, about birds, about lizard, trees, and water. Everything is there. No one's going to read, 15, 20 feet high of binders. So basically, even if you have a committee of citizen or the mayor office, who has time to read this when it's being pushed at you and say, "Oh, read this," and then we'll go to consultation. To me, it's kind of a flaw part of the project, and then the NC mining shows up, and they'll try to find a little handle somewhere to attach themselves to the project and try to bring it down. And if people don't know anything about the project, I mean, this is where the hell breaks loose.
Mhm.
Which bring me to pre-consultation. My plan is to hold a it could be a day or a night, a dinner, you know, a no, a citizen coffee thing, 1 day per quarter, starting in 26, winter 26. For every meeting, we'll have only one topic. I'll leave it to the citizen to choose. Talking to my relation person in Chapais, pick a topic. We'll sit down. We'll discuss it, and we'll see if there is concern, if there is things that we can do to modify the project today. This is the right time. And the example that I told them when I was speaking, and it just came like this. It's like being a chef and facing a bunch of food critics, and you show up at the table with your meal, and you put it on the table, and then you get the critics, and you get rated, and that's it. I mean, and maybe your restaurant goes to hell from that point onward. On the opposite, if you're inviting those people in the kitchen before you start everything, and you say, "Hey, this is the recipe. This is what I'm planning to do. Is there something you don't like? There's something is absolutely indigest for you, and you never be able to take. Do you have any suggestion? What you prefer?" They can have an impact before we cook the meal. And if we, there'll be maybe 4 years, 3 or 4 years to go to submitting the for permit application. If we do 10 of 12 of those things, and we talk about moving the family, moving, the road moved, dust, the tailings, any topics that they want to discuss, and maybe we can discuss those things twice. I mean, they'll come up and talk about something else, say, okay, fine. The company will go away and think about it, and then maybe 6 months from now we'll have another discussion on that topic, and we can bring back what we saw, how we think we can you know mitigate the concern or resolve the issue, and we keep going like this for 4 years. I believe that I have a way of getting to the permitting phase when basically a lot of the issues have been ironed out. I mean, I don't think they disappear, but we will have carried the issue with the people that are primarily impacted, and the same thing with the First Nation, so that at the end of the day, when we get to the permitting, we're permitting the project that, first of all, everybody that is a stakeholder know about it, And if they had their word to say, they had a lot of opportunity to talk about it. And we had a lot of opportunity to hear and act to resolve the issue before, I would say, before the project is cooked
Hmm.
and baked.
Yeah. What kind of people live there, by the way? How old are they? What do they do for work? What do they do for fun?
Okay. Well, okay, what they do for fun, it's 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 all about, outdoors. People are fishing, hunting. They do. There's a lot of walking trail, cross country skiing, and that type of thing. I said ski doing twice, and they play curling. I mean, uh, I would say after
Curling and poutine.
curling and the poutine after, I guess, not during, but and like we're funding and we're a sponsor of the curling club, and
Hmm.
I said to Denis, half the people in town play curling, and the other half wish they would play. So this is what it is. Uh, for environment, I mean, people play outside. Let's put it this way.
Hmm.
Other than the curling and hockey, uh, the the demographic is made along the shape of a hourglass. So it's very narrow in the middle, and there is a group. As you get older, there's a lot of older people and a lot of young people. And somewhere along that hourglass in the middle, everybody that was born after 1991, so that are 30 some, 35 or more, they never lived in Chapais when there was a mine. And all the ones that are higher in the curve remember the time when the mine was there. You know, I worked at the mine, or my dad worked at the mine, or I remember when I was young, we can hear the mine. So it is a, I would say, a binomial distribution. Interestingly enough, in terms of the people in Chapais, uh, there is a wood mill at the entrance of the town. There is a power plant on the other side. I would say that there is a number of people that work in the mining industry. Some of them might, go to camp and have their day in, day out type of thing, or they work for the service industry, around the forestry and the mining area
Hmm.
in Chibougamau-Chapais.
Yeah. Yeah, that's
It
fair.
is it is a town that is there's a lot of grit. Okay, that town technically should have disappeared when the mine closed. There was, the what was the backbone of the town disappeared, but they stayed there and they fought, and and they created a place that is very good living. And when I had a chance to go back there, I was there as a student in the 80s, in the 70s, and basically it it's a great place. I was very happy to return, and I like, the people there want a structuring economic project that's gonna bring back the years of the mine. Someone told me, I wonder why the main road in Chapais Springer is 4 lane. And a very young person told me, when people talk to me about the old days, I think they're describing Los Angeles. And I wonder what it's going to look like when the mine is there, because in the 80s of Opemiska, it was a very nice town.
Hmm. Yeah.
They want the mine to be there. They want the high paying job, and they want the what I would call the indirect benefit of having a project that's going to be there for if you count the construction and the decommissioning, we're over 20 years. So it's you can have a mortgage and pay it, and nice place to raise your kids. And as opposed to all the mines that are north of us. This one, you can go back home at night and have dinner with your kids and bring them to the hockey practice or whatever they're doing over the weekend. You're not on a living in a camp, and that's for quality of life would be excellent.
Mm-hmm. When you talked to them, so you said no one, was phased essentially by the mine coming over the town a little bit in the later years. What are they objecting? I mean, you said the road. What is it? What are the other things that people are worried about when
But
you
they
talk to
they, they ask, okay, we'll let the road on the side for 1 minute. They ask question about how will the pit be backfilled, and we said, okay, in
them?
in
Good
in
question.
the plan that we presented in the PFS, sorry, the plan we presented in the PEA, the Perry pit, the one to the north, which is a shallower, will be backfilled. It will be mined first, and it would be backfilled with waste coming from Springer. And when Springer is done, and the we're only processing the stockpile, we will send the tailings at the bottom of the Springer pit, and eventually the Springer pit will fill with water, and it's going to be a nice lake.
Mm-hmm.
Okay, and they just wanted to know what it would be. People ask about our filtered tailing, how it works, you know, why we're going this way. They ask where, we're putting all the infrastructure, which is, north of the mine, north of the city, so that, with the prevailing wind that are going from west to east, we're keeping everything dust away from the mine. They had question on the water. They had question on the moving of the family, how it will happen, and the process. And right now, there's nothing. I mean, I won't tell you, oh, we'll do it this way, this way. That we don't have anything planned. We've got over 10 years to plan this, and we'll use them again with the people in a transparent process.
Hmm. You
That
think it's going to be
they
more than 10 years before Opemiska is in production?
No, but the movement of the family only happened on phase four. It happens on the seventh year of mining, so it doesn't have to happen at the beginning.
So you can start operating and then people's houses are not going to have it. What's the distance
But
there?
they'll be over 150 meter
That's
away,
still
and they'll
pretty
be
close for, I guess, in terms of like sound and dust and stuff
we'll
like that. No,
we'll build a sound barrier. We'll build uh, I would say a 50-foot high hill. Okay, that will be we call it a green wall that's going to be separating the residential area from the mine. And it is noisy on the first few benches. And as the mine get deeper, the abatement of sound is natural. The mill is about 2-3 kilometers away. So basically all the grinding and everything, uh, should be far away not to be heard. And if there is potentially sound that could come to the town, we'll build a wall, a sound wall on the property, just near the mill, just to keep the sound on the away from the town. So uh, the noise part of it is really at the beginning, and honestly, right now in the town of Chapais, with the big trucks that crosses the town, if you're living near the main road, the Springer Boulevard, sometime I'm doing Zoom in the back office of, we got an address on Springer Boulevard, and my office is at the back, and I have to stop talking because of the truck going up the hill. When you get a double trailer full of trees coming up, I mean, it's noisy. Uh, you know, I don't think we're going to make anywhere near the noise that those trucks are making right now.
yeah,
I don't know. I'd be so upset if that happened.
that's stuff
I
that
don't,
we can talk about later on as well. just going back to what I asked, like, do you think it's going to take more than 10 years to get it into production? I guess a big part of that is going to depend on permitting as well. So government permitting, not only that, how long, just off the top of your mind, and what kind of permitting process would you have to go through? How long will that take?
Well, the permitting process, I can send you some slides on it, and you can put it's really in Quebec. There is permitting for north of the 49 and south of 49. So we're north of the 49, so we go through a process with the First Nation and everything. Uh, the Quebec government has put out a what they call a strategic metal view, and they say, if you're strategic metal, we're going to make sure that you get into production faster. Obviously, the guys who have said that will not be in power when we're ready to go to permitting, but we'll see what happened. Again, I'm looking at we we said January 34 we're mining, okay, and that means building between 31 and 30, starting to build in 31, finishing in 33 type of thing. So that's what we have in mind right now. And this is what I would call the long view. There is room in there to accelerate. Okay. And permitting is exactly the place where it can be faster. And the PFS, sorry, not the PFS, but the feasibility study. If we go out of the PFS and we're fully funded, then it's just a matter of paying engineer to do detail engineering on the project you selected. And it's building engineering hours to de-risk the project from 5% engineering to 40% engineering type of thing.
How's money for you right now? How much money do you have in treasury?
We have about, I would say, $8 million in treasury, 6 million flow through, and 2 million art, round number. And the flow through money will start coming out now because we're drilling at Opemiska on Cook.
Yeah. How far could you get to PFS without having to raise money?
No, no,
Okay.
not at all. I mean, like I said, PFS with all the study and geotechnical, we may have to drill some larger diameter hole for geotechnical. So you need a drill program for that. Hydrogeology, if we need to check where is the water table on the south side of the Guilin and do some modeling and that type of thing. That could cost you money. I would like to have as much of those studies done before I launch the PFS, so that when the engineering firm that's going to be doing the PFS start working, they're not idle waiting for report and answers from subcontractor that do hydrogeology, geotechnical characterization. I'd like to have all those things ready to look at. Otherwise, it's not the right way to spend money. I could launch a PFS today, but then it's going to last for 18 months because they don't have the data and they're going to be charging me high cost during that time. So we can manage the study ourselves, but you can hear Stephen telling me, I'm an engineer, okay? I think about all the things that can go wrong, and I want to be able to nail them down before someone hurt themselves on the bloody nailhead that is out there. I like to do all the studies ahead of time. Clearly, I can launch the PFS when I know that my results will come up in time. But it's a $2 to $3 million spend easy. And this is what de-risking is all about. If you don't do it now, you're going to have to do it later. And if you don't do it later, your project's going to be 30, 50% overrun. And then people will say, why is that? Well, I can tell you why.
Yeah.
Because you haven't done your homework ahead of time.
I guess we could next time we can talk more about permitting and stuff like that as well. When do you think next time is going to be that we should be talking? When are you going to have something interesting to say?
Uh, I would say we're what 6 month time. We would have the cook result analyzed for sure, and probably some news also on Thierry. So we got some drilling because we're drilling at Thierry probably beginning of next year. Uh, and we would have a number of things started on Opemiska in terms of the studies, or we would be about to launch in terms of uh, the baseline. For example, baseline environmental that needs to go now. Well, that needs to go in the spring. So we need 8 quarters of data
Yeah.
before we start, mucking around on the site. So this is something that needs to start in the spring, for
Yeah.
example.
Mhm.
So, all right, in the spring, unless you want to call me earlier, happy to discuss.
Yeah, just trying to get an idea of schedules here and PFS. How far away are we from that? Things seem to be moving in Quebec as well, far away from you in Val d'Or. Um, so that makes me think. I mean, the market is kind of moving again. Copper's above $5. I'm thinking whether you can speed things up here and also again thinking about what is the right time or the right place to bring this asset to so that it's de-risked enough so that someone else, again, potentially forward looking, comes in and wants to buy it and then build it.
I, I would say if a strategic look at this today, it's all about the social because from a technical point of view, they know what needs to be done to de-risk technically. Okay. And they'll look where we are and they'll say, okay, this is what needs to be done. And they will see the same thing that I'm saying. And, they know what they have to do it. I think that what was keeping this project in the dugouts, other than not being known, is that people who knew about it thought that we were going to eat up half of the city of Chapais.
Mm-hmm.
Now, I mean, as we speak, when the words comes out that it's 10 to 15%, that the people in Chapais are uh, okay with this if it's done properly. I think that a lot of the risk is coming out just now. And by the way, we didn't talk about the road. Uh, the businessmen, and you can edit this the way you want. The businessmen look at the road being displaced and they imagine that all the traffic that we're stopping on Springer Boulevard is going to be going around the town. I think that at the end of the day, they haven't. There's two things that are missing, and they were caught cold on this really because we took the design from the town and the town had not shared it with anyone. But I think that eventually the commercial road of Chapais will be that bypass, and the businesses will merge towards that part of town, and the north part of Chapais will be all residential, and all the businesses will be in the south, and this is where the industrial park is. So it's kind of not a bad place, but again, we'll discuss. But we cannot do the mine without moving the road.
Mm-hmm.
Now, if they want to have a little nick and come back through the residential area, turn 90 degree to go back on Springer Boulevard, I mean, who I am to say that don't do that, but I would not do it.
Yeah. And it leaves it's interesting. I mean, we've been going for what over an hour and a half for sure now, and there's still things to talk about. So I'm sure we're going to be touching upon these things. I'm also sure that I'm forgetting questions and missing stuff to ask you here. And if people listening and watching do have additional questions, please let me know. And Guy and
Oh,
I will
sure.
try to discuss them in our next conversation. Guy, I asked you this last time. I'll ask it to you again. If you had a magic wand and you could wave it at something, some issue, challenge, whatever you might have here, and make it go away, what would you wave it at?
The permitting process, not to get it away, just get it done in a timely fashion. I don't want to have a buy on permitting. I just want to know that once I get into the process, there is a timeline that is respected and ends. I mean, Quebec went from the fifth place to the 22nd place in the what they call the most interesting area to do exploration. In the was it the Fraser report or something last year? And some of it has to do with the fact that you know they changed the rule on a number of things to make it more difficult for the mining company. But just get the permitting done and respect the timeline, and we'll go back in the top 10. Only that will be enough to guess back that this is the most uncertain thing that I see in my process. I have a lot of confidence from the social license. I have no issue technically at all. Everything's going to be resolved. All the known unknowns, I have no problem with them. It'll be resolved. The social, I mean, after the meeting in Chapais, I think we have a plan, and we have a very original plan in terms of pre-consultation. I think it's going to be very good, and there's very little risk on that side. But once we enter permitting, you don't know when you come out.
Yeah. Well, again, something to talk about next time as well. I'm going to let you go here. Thank you so much for doing this. Anything you want to add here at the end? What do you think we should have talked about that I failed to bring up?
Well, we should have talked about relative valuation. I mean, we're in the dugouts compared with our peers. And I think that is, it's like having a invisible end pushing on a spring called XXIX. And eventually, my job is to get that hand out of there, get the spring, get back, where it should be.
Yeah. Well, talked a little bit about that off the bat there when I asked you about what you can do to fix it. I suppose marketing is part of what you told me, so it'll be interesting to see how that goes. But again, loads of food for thought and a lot of things to follow up on in a future conversation. Thank you so much for doing this today.
Thank you.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there, so it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias, again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."